Hey, welcome back, everybody. And it is Multifamily Unplugged. It's Saturday morning, and I hope you're enjoying your weekend. You know what? I want you to buckle up this morning. We're going to talk about something a little bit different. We talk about markets, but we don't really ever focus on a specific market. And we're going to dig into that a little bit here this morning. But let me ask you a question. And, I talk a lot about intentionality. This morning, I want to talk about focus. And the reason I want to mention focus is because I see far too many people lose their focus. I did a post this week that was really just kind of on the shiny object syndrome. I'll be coaching a client and they'll be really focused on wanting to learn creative financing strategies and maybe buy some residential properties or some small multifamily properties. And then all of a sudden, they're talking to sellers and writing offers and nothing's coming together and they're not able to get the traction that they're looking for. And they say, oh, maybe multifamily is going to be easier. And then we start working and teaching them on how to underwrite, and they start underwriting, and then they're building relationships with brokers and underwriting deals and looking at deals and writing LOIs, and nothing's coming together. And they go on to something else. That's what I like to call the shiny object syndrome. And what I've realized over the years is that it's focus that that helps us build that success that we're looking for. The ability to be able to grow your business, your platform, your portfolio. And it comes as a result of focus and staying focused in the same asset class, in the same product class, in markets, multiple markets, different markets, but finding what makes sense for you. And how many times in your personal life do you lose focus as well? So I want to challenge you today and through the coming week to take a look at where you're at with your own focus and how you can maybe make adjustments to help you run your life a little bit better. All right, great. If I can help with any of that, if I can, add value in any accountability or maybe straightening out some craziness or chaos going in your life, reach out. We can network a little bit, spend a little time on the phone, and see if maybe I can help or give a couple of great pointers. Hey, my guest this morning is Lawrence Dunning. Lawrence is a Chicago developer, investor, and broker. Recently moved to Indiana. We're going to hear a little bit about that, but we're going to really focus in and talk about markets this morning. So help me welcome Lawrence to the show, you guys. Hey, Lawrence, good morning.
Morning. Thank you for having me, Mike. And I really love what you said about focus. I think we're a focus-driven economy right now. And so many people, I read this really sad statistic last night, about how the average mother looks at their phone something like 300 times a day. And every time the parent looks at the mom, and then she's not looking at the kid, she's looking at her phone, the child's development is thinking, I'm less important than this screen. And I think, the technology is amazing. Look at us. We're talking thousands of miles apart. We're having a great conversation with technology. Right. There's so many benefits, but the negatives are it's just taken everybody's focus. And I don't want to live through a 3-inch screen. I want to live in the real world. So I'm really glad you said that. And I'm going to lead this conversation being more mindful about my focus.
Yeah, good for you. It really occurred to me this week. I was on a coaching call with a client, and I have a coaching platform, and I teach people real estate and multifamily and some business strategy. And I have a client that is building a platform, and he's building a crowdfunding platform, actually. And I've watched him go and work on the website, and work on the newsletter, and work on his LinkedIn branding, and work on, this. And now his focus has shifted to something else. And it occurred to me this week that, man, if you don't get focused and accountable and be accountable to one task at a time, one project at a time, we tend to flounder. And I've been there myself. I've done it myself, right, over the years. It's what I like to call that shiny object syndrome, right?
Yes.
Where the grass is never greener on the other side. That's for sure. So, hey, listen, thanks for being here. I always, when I kick my show off, I love to ask one question of my guests, and I keep threatening I'm going to write another book, and it's going to be called The One Word. But in one word, what best describes you personally and professionally?
Personally, I would say positivity. I've had so many people say, you should be a motivational speaker, because I try to look at the positives in life, the positives with people. I try to emphasize people's positive qualities. And that's something that didn't come naturally to me. I think I was quite negative as a teenager. And then just over time, I realized that, we have two choices. You can see that the positives in front of you, and you can see the blessings you have in your life, or you can focus on what you don't have. And having a positive view is definitely gonna make you much happier. So I definitely think positivity. Professionally, that's a tough one. Maybe driven. I would love to ask a couple of my colleagues and see if they would agree. But I think I'm very driven, and I want, I'm 47, and sometimes I feel like I'm 87, because I'm very aware that we only have one shot at life, and I want to do as much as I can and have as many blessings as I can. And back to what we started this conversation with, I want to be as present and as focused as I can as well. But I do have big dreams and big goals. And I came to the US as an immigrant when I was 23, and it's given me so much. I've worked really hard, but I've had so many blessings. So I'm just driven to really maximize my one shot of life.
Yeah, that's awesome. You just kind of sparked a great idea for me, and I think this is awesome. You said that your personal word is positivity, and your professional word is driven. Here's what I would do. I'd write those down, and I'd challenge anybody listening this morning. Think about what that one word is, who you are, what defines you, or what your purpose is. And then go ask the people closest to you. Go ask 3 people closest to you. Hey, if you had to give me one word, what would it be? What would you say about me? And see how that lines up. I think that's a brilliant idea, actually. Kind of interesting. Hey, so you said you came to this country when you were 23. Why don't we talk about your background a little bit? Where'd you come? Where did you move from, and what brought you here, and why'd you stay?
It's so funny when you look back at your life, you realize like these tiny decisions change your life. So I graduated college, and I stayed on to get an MBA, and then I graduated from my MBA, and I've been studying hard. I was a good student, and I just wanted to relax. Always knew I'd be a hardworking person, but I just wanted to relax for a year or two and just kind of enjoy life. In England, there's a big thing where you kind of take a gap year after college and travel, go to Australia or something. And I thought, wow, that sounds great. I've got family in Australia. Maybe I'll go to Australia for a year, be a beach bum, have these adventures, and then I'll start my career. And just when I was thinking that, when I graduated, my uncle, I'm very close to, he said, Lawrence, I was just at a dinner party in London. And I grew up in the suburbs of London. He was always central London, and he'd meet all these interesting people. And he said, I was talking to this guy, and he worked at a trading company, and they're expanding. And I said, wow, you should hire my nephew. He's perfect. So he's telling me this. He's like, here's the number, call the guy. And so I thought, well, if I'm gonna travel, why don't I work for 3 months, make some money, and then I'll just have more fun when I travel because I'll have more money. So I go to this interview at this trading company, and I walk in. It was called Mako Trading, and they had a huge aquarium with these little Mako sharks, and it was just these young kids are making all this money. And I thought, maybe I'll put off the trip to Australia a few years, work here, and make a lot of money. So I ended up becoming a derivatives trader, and they had offices in Amsterdam. So I worked in Amsterdam for a year, then on Wall Street, and Chicago Board of Trade. So they were kind of sending me to these different locations. And I got to Chicago in summer, and I'd already moved a few times. And I was like, I loved Chicago. They put me up downtown in a high rise with a beautiful view of the city and the lake. And I'm 23 years old. And I thought, wow, this is life. So I ended up making them a whole bunch of money. They paid me almost nothing. And then I left with one of the old traders who also got screwed over. And he said, why don't we start our own trading company? So in my 20s, I had a trading company. I made all this money, and I was very passionate about martial arts. So when I was 30, I actually retired. I had all this money, and I was a single guy, and I fought professionally for 5 years, and I had all these crazy adventures. And then I got to 35, and I kind of blew through a lot of my money. I went through the 2009 crash, and I thought, what am I going to do? And the only smart thing I did when I was wealthy is I bought a commercial strip mall in the north suburbs of Chicago. So I really appreciated the fact that I could live on the income and it was a stable asset. And I thought, I know so much about finance, but I don't really know anything about real estate. They don't teach it. And when you do get your MBA, they don't really teach about real estate investing. So I started thinking more about real estate investing, and I started talking to some developer friends that I got connected with and doing rehab projects. And then one of my best friends at the time, he was an attorney and he hated being an attorney. And he said, I'm going to set up my own real estate firm. You'll be a great broker with your English accent. You'll get all this business. So then I got my license, and that was just over 10 years ago. And it's been great. It's been really great changing careers in your mid-30s. I think it was very humbling to begin with, but I grew a lot as a person. And now I do three things simultaneously. I'm an investor, I'm a broker, and I also do, I'm working on, I was doing rehabs early in my career, and now I've switched to new construction development, and it's a lot of fun.
Yeah, interesting. That's cool. What a great story. Who's the big Irish broker in Chicago? Sean Collin.
Oh yeah.
Yeah. When I was selling residential real estate in Chicago, he was really, had a name for himself. That's for sure. He dealt with all the Irish builders, and when the condo craze was going on, and yeah, pretty funny. So your broker was right that you would do really well in real estate, being with an English accent for sure. So hey, and I just have to ask, what was the strip mall you bought?
So it was about 50 miles north of Chicago, and it had a Firestone and a Subway, and then it had a couple of a nail salon, a restaurant, two restaurants. And it actually, because the commercial side of real estate, I ended up selling it years later, and it wasn't the best investment in the sense that if I bought the same thing in, somewhere closer to the city, like say a residential 12 unit or something like that, that would have done a lot better. Because the problem with, I feel like online, Amazon and these places, they've made it really hard for a lot of these retail stores. And the Firestone was a really good anchor tenant, but they ended up outgrowing the space. So I ended up partnering with them on we built a bigger location for them just across the street. But then I was struggling with vacancy and getting the place filled. So commercials, I don't love that kind of business model. I think it's great if you have the right tenants, but the vacancies can last for a long time and it can be difficult to fill spaces. Whereas residential, if you buy a 20-unit building and the units are priced fairly and marketed fairly in a big area, like any area around Chicago, you're never going to have a problem getting those filled. So I like the ease of multi-units when it comes to residential tenants as opposed to commercial tenants. That's me personally. I know some people kill it with commercial, but that's me personally.
Yeah, everybody likes something different, and I think that's the power of the podcast. That's why I like doing the podcast so much, is because, different guests have different visions, right? So, are you still doing commercial today, or are you more focused on, another asset class?
So the key of my business is probably, I would say, new construction 3-unit buildings. That's kind of the key. So I do sell bigger buildings. I do sell gut rehabs. I sell buildings that need to be rehabbed. I sell a lot of lots from off-market lots from private sellers to developers, things like that. But the main core of my business, and in Chicago, a standard size lot is 25 by 125, and the zoning, it's the multi-unit zoning allows for 3 units, and they tend to be about 12 to 1,300 square foot, 3-bed, 2-bath. So that business model tends to work. It works for everybody. On the development side, the margins are slim. We're going to talk about that, I'm sure, but they can make a little bit of money, and then the end buyers, they can make a good cap rate. So even for new construction in a lot of areas around Chicago, you're getting mid-7s cap rate, which is fantastic. If you look around the country, you're going to be very hard to find that in other areas, and that's why I work with a lot of investors from the East Coast, West Coast, Texas, all over, all around the Midwest too, that are looking to invest in the Midwest just because you have those higher cap rates.
Yeah, interesting. Hey, so let's talk markets a little bit, and let's really start more um, on micro markets, because if you're are you building in Chicago right now in Chicago, or are you building in the suburban market?
No, no. So it will be classified as Chicago. So the big area the last few years was the south side of Chicago. You have, you're fairly close to the lake in places like Woodlawn and Washington Park. So you're about, Washington Park is about the 5,500 block. So you're about 5 miles south of downtown. Um, and there's been a lot of development there. That was kind of the hotspot. You had the Obama Museum was getting built. It just got finished a few weeks ago. So I get a lot of calls from people out of state saying, hey, I'm hearing about all this stuff going on in the South Side. I want to invest in the South Side. Recently, there's this huge 1901, it's called the 1901 project on the West Side now, just past the United Center. And that's a $7 billion project that is going to include all these different things. Residential, it's going to have a hotel, it's going to have commercial stuff. And so a lot of people now are calling me and they say, hey, I want to be around this huge development. If people are putting in billions of dollars in this area, I know that everything around there is going to appreciate. So the South Side was the hotspot, and now the West Side is the hotspot. But I mean, you're talking without crazy traffic, 15, 20 minutes to downtown. So it's still part of the Chicago area. It's not the suburbs.
So how far west is that project going to go?
So it's going to be about the 3,000. I think it's going to be closer. So I'm selling buildings around the 3,000 west block, so 3 miles west of downtown. And I think the project is going to be slightly east of there, so probably 2.5 miles downtown, which is probably right around where the United Center is.
Yeah, so that's like between the United Center and Ashland, or even beyond Ashland.
Yeah,
really.
I was going to say, a little west of Ashland. Yeah, exactly.
Because I lived in East Garfield Park for a number of years.
Right. Well, East Garfield Park, that is the hotspot. That's where people want to be. Like, West Garfield Park is still a little
sketchy,
exactly. But East Garfield Park has become crazy expensive. But the interesting thing is, I'm seeing there's a bit of a divergence between the price that people want for the properties in East Garfield Park and the rent prices. So of course, I think people are banking on the appreciation more, so they're asking more for the price. So I see a lot of stuff on there, and I'm like, I don't know how they're going to sell this. It's tough to sell a building that doesn't have great numbers based on this, expected appreciation, when you can go to other areas of the city and get something with a great cap rate today.
Right. Oh yeah, definitely. I definitely can relate to that. And so I've always kind of been a blue versus red kind of investor. And, we know that Chicago, Illinois is a blue state, and, tenant laws are not all that favorable for landlords. Evictions could take you 180 days in some cases. Why, are you a merchant builder? Do you build and sell, or do you build and hold? What's your, mythology behind that?
There's definitely challenges to building and investing and buy and holding, long term in Chicago. It does have challenges, like you mentioned, the blue versus red states. But I think that's why you're getting those higher cap rates. If it was an area where you could get people evicted in 30 days, you could get permits, like I think in Texas, you can get permits in a few weeks. Illinois, the permitting process is a lot longer. So you do have some challenges, but you'll get the payoff is the higher cap rates. So I think that's the secret. That's the secret sauce, is you have to work within those constraints. And you said it perfectly. If evictions are really challenging, what you have to do as a landlord, well, you have to have a really good management company that has really good screening. And that's we can talk about that. It's become crazy with AI and the amount of fake applications, and you're using AI to check if it's an AI, application, fake application. It's just wild. Like, all this stuff is new. We're working on this in real time. The amount of fraudulent applications I've seen, even in the last, 9 months, has been astronomical. So yes, you do have challenges, and that's why you have to have a really good team. And I always say, especially if I work with clients that buy buildings, say they're in California, sometimes they'll fly in for the final inspection or something, maybe the closing. But a lot of time I've sold buildings where someone's never even seen it, but they just trust. They obviously don't know the numbers. They trust my opinion, and then they trust the property management that I set them up with. And I really think for those people, the key to real estate investing is property management. If you have a good property manager that's doing a really good job getting you the right tenants, screening properly, doing everything right, then you're probably going to have a really good experience with real estate investing. If you try to skimp and save, I've had most property managers I recommend are charging around that 7% margin. I've had short-sighted investors that will buy something and say, hey, no, I'm good, Lawrence. I found a property manager for 4%. And then they call me 7 months later and they say, hey, I have a vacant building. This property manager didn't do anything. Please help. So I think the key, it's such a small thing, but don't be, what do they say? Penny wise, dollar foolish. Don't try to skimp and save. The key to real estate, in my opinion, is obviously starting off with the right property and the property management. They're the key,
So how do you feel about the suburban market?
It's not really my market because the inventory that I deal with, the new construction 3 units, builders don't really build that in the suburbs. So I guess in the suburbs, it's going to be more single family homes and things like that. And just because I started my career living in downtown and all my connections are builders, and I got into that market with the 3 units. And it's actually really interesting, Mike, because, it's easy for me now. I'm known as the new construction broker. I work with all these clients. People call me, other brokers call me and say, hey, what do you have coming? Let me know. I've got a guy, and I match a lot of buyers and sellers before things hit the market. But that niche all started because I had one good relationship. I met a builder he had his own license. He would sell his buildings. And he said, I'd love you to be the face of my business. I'd rather focus on something else. And I felt guilty. I was collecting big checks from this guy for his buildings that would sell themselves because it was a good market back then. And he did a great job and he priced things fairly. I felt guilty taking the commission. I was like, you have your license, you can sell them. But he's like, no, I want to focus on other things. And then he's connected me to a dozen other developers over the years. And that's kind of my niche. But if I lived, I've got friends that their business changed as they moved to the suburbs. They were city guys. They had a family. They found a place, an hour north of the city in, Northbrook, or they're far in the west suburbs. And then suddenly they're calling me today and they're like, man, we used to do all these deals together. I'd have all these downtown buyers and they'd want to buy your buildings, Lawrence. And now I'm a suburban broker, I'm working with the guys around me. So I think that's, it's a combination of, there's not really my kind of inventory. Builders, they're building single family homes in the suburbs. They're not really building 3 units. But also just where I started my career, where I made all my connections was in the city. So that's actually a good reminder for people that are newer in real estate and they're looking to make connections. Your business is going to be, when you make the right relationships, that is the core of your business. It all comes down to relationships. So going back to the word that we started with, where I said my professional world was driven, maybe another word could be relationships, because I really do prize the relationships. And a lot of the developers I work with have actually become dear friends, and they have great stories too. You mentioned the Irish builders. There's there's a lot of Irish builders in Chicago. It's funny how I've got a friend who's has a donut shop, and he's originally I think it's from Laos. Lao people started donut shops. Like, you have these different nationalities that they seem to really excel in one industry. But I've noticed you have a lot of Eastern Europeans and a lot of Polish builders, Romanian builders. I have a great Russian builder. So a lot of these builders, they have these great stories. They're entrepreneurs too, and they came here with nothing from their country, with no opportunities, and then they flourish and they bloom in the capitalist opportunity that we have. Even though the state, like you mentioned, is not the easiest state to work with.
Right. So what's it costing you per square foot in the city to build?
Well, let's see. It's if you're looking at what people will charge you in, say we're talking about a suburb single family home, you're probably in the $250 a square foot. In the areas that I work with, the up and coming areas where we have to make the margins work, you're at about 175, 180, which is, I think, incredibly affordable.
That's pretty affordable. Yeah.
Exactly. Yeah. But you have, and that's kind of like we're talking about right now, there's a gulf between the sellers that are selling a building that they built, say, 6 months ago. They know that if they build that same building today, with the material costs going up, because of the Iran war the last few months, they're going to have to spend 30, 40, 50,000 more to build the exact same building today that they built before. But then on the buy side, because the interest rates are back up, the buyers are like, hey, my cash on cash is way down because rates are, in the mid to high sixes for investors right now. And I want a discount. So you have this big gulf between expectations, and that's the challenge. That's what we're working on. I was on a call today with a buyer and then with a seller, and I thought we had a verbal agreement yesterday. I sent him the contract, and they just called, and he said he wants a better price. And I was like, I thought we agreed this yesterday. So that's the challenge that I'm dealing with making deals today is everybody, that the sellers know that prices are going up and the buyers know that the rates are high, so they want a deal. So it's a very interesting and difficult environment for sure.
And what kind of cap rates are you looking at? Let me back up before I ask that question. So you're building everything new, or are you doing redevelopment, or are you doing both?
So the core of my business would be new construction. And when I started in the business 10 years ago, it was rehabs. And then what you'll find is when most people that were doing rehabs switch to new construction, they don't go back, because the new construction business model, once you have that down, it's just easier. You kind of know what you're working with. Your architect is just tweaking your plans depending on the lot, but you're using this. You've got the business model. You're kind of just tweaking it, but you're using most of the same thing with your developments. Whereas with rehabs, every building's different. With what you're working with is going to be very different. You never know what you're going to find when you rip up the drywall and you go, if you're doing a gut rehab, you never know exactly what you're getting into. And the resale the comps are a bit more difficult to determine on the resale. Whereas with new construction, most of the areas I'm working with, there's enough comps there where you kind of know what you're working with. So it tends to be a lot easier.
And what are you seeing cap rates at in the city now? And I know this is probably neighborhood by neighborhood, where Woodlawn and Hyde Park are going to be two different cap rates, and the West Loop is going to be a different cap rate. So
well, Mike, I'll tell you. So for most of the areas I work with new construction, when you talk cap rates, I'm assuming you always get a year or two with an incredibly high return, because the tax often isn't assessed for a year or two. So the numbers look incredible. But once the tax is assessed, and I'm running numbers at about 2% of purchase price, you're still in the mid sevens cap rates, which I think for a new construction building in a major city with a mid sevens cap rate is incredible, because you're not even for a rehab, you're not really getting a better cap rate for a rehab. So why, as long as the developer you're working with is good, why not go for new construction?
And are the rents lining up?
That's the thing, is we're seeing the rents higher for new, because there's something about new. People just love new. Even a beautiful rehab, it doesn't have the same allure as a new construction. So yeah, you're really maximizing the rents on new construction. Yeah,
I always say that, you could take a 1970s product and you still have a 1970s product even after you rehab it, right?
Exactly.
Where new construction is new construction. So
yes.
Yeah, exactly. Good for you. That's awesome. So where's the next project going?
So the next two I'm waiting for permits are going to be 2 side-by-side 3 units. And it's an area called, I guess you call it kind of UIC Medical District. So it's close to Rush. Hospital has a big campus, and one of those is called Mount Sinai. So it's a block from Mount Sinai. It's a really nice little pocket. So I've been selling there. I've got one developer who's it's hard to find the lots there. There's not many of them, but he's been working there for the last few years. And then we partnered on this development project, which is great, because those typically pre-sell, because there's so little inventory. People want to be by the hospital. I remember reading a book, and it was on investing philosophy. And the whole thesis of the book can be summarized with: buy a building very close to a hotel, to a hospital, because you're going to have an inbuilt tenant base right there. And so that's kind of this business model. A lot of people have that same philosophy. You're going to have so many people that are associated with Mount Sinai Hospital, they can walk. It's a block, So of course that's going to really help get the maximum rent prices in that building.
Yeah, that's awesome. Hey, so I remember that East Garfield Park Market neighborhood, there was a lot of vacant land over there. But when you get over by Rush and Mount Sinai, there's not as much vacant land. Are you doing tear down stuff there at all and rebuild?
Great question. So far we've been lucky enough to get the lots. So it has all just been lots. The there's two in general, two kind of different business models with new construction. If a lot of the areas with big vacant lots, and like Garfield Park you mentioned, a lot of them are being sold by the Chicago Land Bank, and they'll sell to the developers at a discounted price, and they'll give you, they run out of money sometimes, but right now they have this $20,000 grant for a buyer. So not only does the developer get the lot cheap from the land bank, they also can sell it with this grant. But the caveat is it has to be sold to an owner occupant. So that makes it a little tricky. Whereas if you buy a land privately, you're probably going to pay a bit more, but you can sell to an investor from California or from New Jersey, it doesn't matter, or you can sell to an occupant. So your buyer pool is bigger. So that's actually the interesting interplay is some of my inventory that I have coming, I have to sell to an owner occupant. Others we can sell to anybody. So that's a lot of the areas where there's a lot of vacant lots. A lot of them are getting sold by the Chicago Land Bank, and you're going to get it for a better price, but you have that restriction on it.
So do you think Chicago is the best market in the Midwest right now?
You know, one thing about me is I've spent a lifetime learning. I'm a huge reader. I've read a book a week on average for the last 25 years. I'm well aware of what I don't know. And I couldn't tell you the first thing about, the Ohio market or some of these other markets. I know what I know, and I know my market very well. I couldn't tell you much about the other markets. I really couldn't.
Yeah. Isn't it funny? Here you are focused, right, on the Chicago market. We're back to that word again. So that's good though. As long as I lived in Chicago, I struggled with Chicago, Cook County versus suburban Cook County. It was always those landlord issues, and I had a big management company, and managing property was you were always in housing court, and especially with south side and west side properties at the time, and I know the city continually is changing and expanding and growing, and so but good for you. So,
Mike, I'm glad you said that. If I can just comment really quickly.
Yeah, for sure.
I think a lot of people, it's funny, we keep coming back to your word, that the focus. A lot of people focus on, they look at the paper, like what's the cap rate on black and white, and they don't think, well, how many headaches am I going to have in this area versus that area? And that's why you have to have a holistic view, and you have to look at the whole picture, and you have to think, why am I buying real estate? Because if I'm buying it as a place to store my wealth, and I want to have some tax write-offs from depreciation, but I make a whole bunch of money. Some of my clients make huge amounts of money. They're partners in law firms, or they do really well in whatever industry they're in. They're not necessarily looking for crazy cash flow. They just want a stable, strong asset. They probably want to have a bit of a less high cap rate and be in a better area where you're going to have more tenants, and you're not going to be in building code like you mentioned. So I'll say that's a really good caveat is, what are you looking for? Listen, if you're 22 years old and you don't have anything, and you want to buy a building and live in one of the units for the first year, try and buy it with 3 or 5% down, and you're willing to deal with some difficult tenants because that's all you can afford, then of course that's very different from a guy who's 50 years old and he already has 6 buildings and he's just looking to grow his portfolio with as little headaches as he can. So I'm just so glad you said that. It is a challenge, but even the areas I work in, which are a lot of them are up and coming areas, it all comes down, like I said before, having a good property manager who's doing a really good job screening tenants and putting up, not trying to rush. And you can get these buildings rented in 3 days, but you want to take, 3 weeks because you want to have a lot of tenants and you want to have strict, your strict requirements, and you want to wait for the tenants who qualify.
Yeah. That's awesome. And do you raise capital to do your deals, or are you do?
It's a mixture of, put my own money in, put other people's money in, and sometimes construction loans, whatever we need to get the job done.
Yeah.
But yeah, exactly.
Yeah. And what's construction capital costing you today?
So there's 2 different types of loans that I work with. If you were looking at hard money, you're looking at whatever it is, 15 to 17%. But there's a couple of local banks that will finance construction, and they're much more reasonable. They're about 8 to 8.5. The issue with them is, it's just painstakingly slow. I saw my family in Europe last month, and we've been working weeks to get this construction loan finalized because we've already got the permits, broken ground, done the foundation. The whole exterior of the building is up. I'm like, we got to get this loan going. I'm burning through all my own cash to keep this going. And then I said, hey, we're a week out. I'm a week out from leaving to Europe. And I said, hey, I've sent you everything. Can we get this finalized? Because I know I have to sign in person at the title company for this loan. And then he's like, yeah, I'll try. Sure enough, it wasn't done. I'm away for 2 weeks, Mike. I get back. It's still not finished. And then I'm back for 2 days. They're like, okay, we're ready to sign now. And it's just that's why people pay a higher rate for hard money, because it's quick and easy. And if you want to try to work with some of these local banks, yes, you save money on fees, but you might be, 10 weeks into a project burning through, 100,000 of your own cash before you can even get, your first check from them.
Yeah. Yeah. All right. Well, Lawrence, I appreciate you being here this morning. A lot of good insights, and kind of makes me miss Chicago a little bit, except the snow. So that you can, and building in the winter can't be easy either. So
Mike, I can't believe it. Sometimes I work all the time, obviously, but I'll be there when it's just so cold, and you see these guys outside doing exterior work in the weather, and I give them so much credit. They're really they're tough guys out there working in the Chicago winters. So yeah, they work 12 months a year, whether it's 100 degrees or minus whatever it is in the coldest months. And I give them a lot of credit. But somehow they make it work.
Yeah, good for them. Good for them. Hey, how do people get a hold of you if they want to talk a little bit more about Chicago, about new construction, or maybe even investing some capital with you?
Oh, thank you, Mike. The easiest way is my name, Lawrence Dunning, on LinkedIn is probably the easiest. I post a lot of projects and things about real estate on there. And my name is pretty easy to find online.
Nice. Again, thanks for being here. Thanks for being here this week, everybody. Remember, you can always find us on social media. So if you're on Instagram or YouTube or TikTok, just subscribe and follow us. We're always bringing great guests like Lawrence and trying to bring great content and information that's going to help you focus a little bit more on what you're working on. Thanks, and we will see you next week. Stand by, Lawrence.